Good evening. This is the Elliott wave update for the S&P 500 and the Nasdaq 100 for Sunday, March the 5th, 2023. The Globex session is just getting started, and not surprisingly, the markets are finding some sellers. Nothing too big, nothing too great, but then again, we've been open for 3 minutes. So let's kind of jump right in. If you've listened to the podcast that I posted yesterday, you have an inkling as to where I'm going to be going with everything. And so I can present that as the markets do appear to be dropping into what I would initially call a small fourth wave. So let's take a peek. Right now, I've got the 4-hour chart up. Let me just kind of pull it in a little bit. There's the top of the X wave. And remember this intermediate degree picture right now is a double ABC decline. And so we've already had the ABC. That's the intervening X wave. This is the second A, the second B, and we're starting on that second intermediate degree C wave down. And so all of that remains in place. And again, there's still a lot. As soon as we get this going, everybody's going to come back and wonder, can it break here and here? And it's like, yeah. The reality is that the decisions on where things are going to be closing by Friday of this week will start tomorrow. So we are into the new week. We need to just, so it stays within the box. So we've tried to break the bottom of the box last week, stopped, and they pushed up because they needed a particular level for Friday's expiration. So now we get to reestablish, and hopefully we don't know, because we need to see what traders are going to want to do in terms of, are they going to continue to push it higher? So we need to see where the derivatives are going to go. We need to see what happens in the options, because honestly, that's really where it's coming from. So until we get another larger catalyst from a Fed meeting, from a CPI or PPI, from something from outside of trading technically, that's going to toss the technical picture. It's easy enough to technically put in downside and technically put in upside. But right now, we need the algorithms to choose basically the prospects of higher interest rates over a longer period of time. That's the big gig. All right, back into what's happening, because I really do talk about that and cover it within the podcast. So I'm going to jump right down to the 4-hour, remaining here with the S&P. So we've done the first minor wave down, and that's all right here. And so within this C wave down, remember, intermediate C wave down, which is where it began. So we have 1, 2, 3, 4, 5, minor wave 1, we're in a minor wave 2, and then just to kind of really blow its cover, this minor wave 2 put an irregular B wave in, which created a new low for the sequence, not a low for contract or anything else, just a new low for this sequence, and it puts in an irregular B, still a part of a minor wave 2. And so this fit, and then that is the result. So this is pretty clean to me in terms of that it's still within a minor wave 2, and it's A and a B, and we're going to get a C up here. Now, so the first thing I need to add is, where are we within that C wave? So I'm down to the hourly chart. Let me open that guy up. We want to open it this way so we can see pretty much what is going on inside, because now I'm in here. Now I'm counting a C wave. A C wave is going to come from 5 waves. So I can do 1, 2, and then is this 1, 2, 3? Or is this the third wave? So 1, 2, and then 1, 2, 3, 4, 5 of 3. We're in a little 4, which would suggest we have one more, a little bit of a rally to do. Now, wave 5 would then be compared to a third wave, and this third wave, if correct in this labeling, is pretty big as a third, but it does fit. Now, what I need to add from here, and because now we're looking at what is the potential for that C wave. the C wave is going to be compared to the A wave. And there are Fibonacci's that you apply to the C wave if indeed wave B is irregular. So let's put that in. So we're comparing the A wave to the C wave. So here, we're going to start here. I'm going to put it in to the top of the A, down to the bottom of the B. And now we've got our C wave. So the most common, right? This being an irregular, the most common is the 1.618. And right now, that's exactly where it topped out. It's now trading below. It closed above on Friday. Now it's back below. And that level was really 40.50. So no matter how we want to look at it, at 49.99, 40.50. And it went above it, not by a whole lot. Now it's back below, not by a whole lot. So if we're looking at a fourth wave in here, a small fourth wave, what I'm going to tell you the truth. It's like, to me, I'm going to eyeball it, because we need to, for this not to be done, it's got to hold higher levels and then zip up, put that in, and then get a rejection. Because don't forget that as I've discussed previously, what I'm looking for here is this is a beautiful rally, but you see how parabolic it goes? So it's almost that it's not really sustainable. It's now pretty clear. It's like you could look around. There wasn't anything to produce it. There was nothing to turn an entire whole index or several indexes bullish. But there was, in terms of where derivatives were trading and where the calls were and where the open interest in the calls, the 40-50 call, and both the SPX would have been down a bit, but more here in the ES, there was the 40-50 call. And you get a lot of open interest there, and it produces like what we would call a magnet. It's like a price magnet. It just draws everybody to there. And so there's a lot of dealing that goes on in between. So again, straight run up. And what this you would be looking, in all honesty, for it to come back down, because it just went up too fast. But if it is indeed only a fourth wave and we have one more leg to complete the C wave and then the minor wave 2, then that would be the area where I am going to be looking for price rejection. And that normally is that there's something that kind of just re-engages, even if it's only for a brief moment, reality. And reality is that interest rates are going to consistently go up for the foreseeable future, quote unquote. I'm not making it up. That's the messages we're getting. So that would suggest the next, we're already looking out in terms of the Fed funds, we're already looking at the September contract. That's what they're out there pushing right now. And so where September goes, it's like, well, you just follow the bouncing Fed. And so we have the cyclical meetings, which are March, June, September. There are futures in between, and there will be meetings in between, but those are the the quarterly. Now, back to this. We're on an hourly chart. Could this be over? Yes. I could basically call it a very nicely extended 5. One's the shortest wave, so 1, 2, 3, 4, 5, and that breaks into its own 5 as well. But there's always within this that I could kind of go, well, that's a 1, 2, and then 1, 2, 3, 4, 5. That's a third, and now we're still on a 4. We still need one more to complete the move, to complete this segment of it. Still could be 1, 2, 3, 4, 5, but within this final launch, we basically got 1, 2, and then 1, 2, 3, 4, 5. That's the third. We get a 4 and then a 5. So where you're going to run your fibs for this, if we're counting it from just this move, you're going to run your fibs from the 2 to the top. From here, this low right there. Let me see if I can get this a little bit bigger. You're going to go from that low, and they're just going to be retracements to that high. And that's going to give you the fourth wave. But right out of the gate, I'm going to tell you that first you get the 4, which is where it's sitting. And that's at 40.45-ish. Then below that, you have 40.37 and then 40.32. Actually, this could likely come down to 40.20. And that's just going to be a fib on the way back down but let's just kind of take a peek. We're only looking for the 4, and that's only going to go by the 3. And I'll take it from that low. Or just, oops, I'm going to do retracements and take it up to that high. And we're looking for 382, ding, 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 right there. So 40.31 down to 40.30. And that would be 382, a nice little floor, clean. We run up, we put in an additional new high above. We've already gone over this, that we have the resistance levels, fibs, and this should be pretty good, at 40.56, 57, up to 40.60, and then 40.79. Now, could the market get up to 41? Yeah, it could. And it could do it on a push, but on a Monday, I don't know. So I do think we're going to come down. We should find that support. And if we are going to run back up, then we're going to do it and we'll get there, and could happen overnight during Globex. If the market has reached its high and I can count up and we're done, and I'm going to put the C wave up here and the minor wave 2, then we should drop and we shouldn't be pausing. And that then becomes more that it's triggered. And there are plenty of things that can happen that can trigger any downside. We still have the Asian markets that will be opening in about 45 minutes. And then we have the European markets, of course, that open much, much later. So still a lot to come in that could control how we open tomorrow. Both sides of the story do leave open the potential that we come down, hold in the S&P about 40.30, has potential can drop down to 40.23, 40.20, and still run up 40.65, 40.79. If it's done, then it's not going to pay any attention to these. Nope, didn't want that. We're going to go right there, and I'm just going to go this way, remove, just remove. Okay, we're not. We'll get rid of that. And actually, I'm going to get rid of this because that's the upside. We're going to dump that. If we're looking for downside, it's going to start coming down below pretty quickly, 4,000. Pretty quickly, because it's going to have to break the 50, the hourly 50, and the 200s pretty quick. Get these heading in the other direction. Right now, on the hourly basis, they're okay. The 200s are flat, which kind of puts a limitation on it in terms of well, it's not really perking up that 200. But it has now got the attention of the 50 and the 50s getting ready to cross the 200. So, yes, we're still allowing for upside here. Downside, you break it right away. And that stops its momentum and gets it going flat to down. All right, over in the Nasdaq, it's basically the same story where we had a very, very powerful Friday. And just ding, 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 all the way up. And here again, it could be 1, 2, and they got a 1, 2, 3, 4, and a 5. For wave 3, the little 4, we get a 5. Brings us up back again to 12,350 to 12,365, we'll call it. And then you still have that 618 sitting up at 12,465. And that is, again, if we just bounce out quick, to take a look at the 4-hour chart, what we're looking at is 0.618. Open this up. Is again for the minor wave 2. And we're placing that at the low for minor wave 1, where it started, down to the minor wave 1's bottom, not the irregular B bottom. That's going to give you a different set of numbers, and the market may disappoint you on them. So, again, 618 up here. The wave 2 we're not that far from it, but we got big pockets here. I got to open that up. I'm talking and I can't even show you the numbers. We got big pockets around 120, 12,285 down to 55. And then right around the 12,350 area. And again, I'm not really looking for this strong of a push. Can the Nasdaq do it? Yes. But I have to believe that the narrative is going to change. And so in this particular case, the markets are going to key off of each other. In other words, equity markets are going to be looking at the bond market. Bond markets are just kind of looking around to see what's going on with the interest rate. So again, it flows down. Everybody has to realize how we're going to price. Bond market right now is not doing very much, neither is the equities. So we leave open all potential. Again, 4-hour chart. Off of here, I'm looking for a C wave. Doesn't it look like 1, 2, 3, 4? We still got a whole 5. That's basis the 4-hour chart. So again, 1, 2, 3, 4, 5. That's a wave C. That's a wrap. So I begin to take a look right in there. 12,350 to 12,075, 375. So we've already been, we're at 331. We just dropped below 12,300. But here, I go down to the 1 hour and I can show you what the limitations are or possible for this fourth wave that is in action. We actually could, and what I need to do now is we need to keep that upside in mind. And now I'm going to open this up and open this up and bring it into focus just a little bit here. If we're looking for a wave 4, in other words, we're calling 1, 2, 3, and now we're looking for the 4. Because remember, on the 4-hour chart, that's pretty much what it was showing us. So now we'll follow through on that and put, oh boy, a lot of activity, and put it on so we can see it. Here you go, 1, 2, 3, 4. So that's the level, 12,093 going down to the hourly. So we get our points correct, right? And we're going to take a quick look at that again. And now we're going to put in where we think we should have support for small wave 4. That's the one we want. Come on. And that's going to go from this low to this high. So the Nasdaq's always going to have a little bit more oomph. And I'm going to take this one out, even though we need to remember 12,285. Now we're going to be looking here, 12,207. So it fits. It could drop down to 12,200. If that holds, we'll label it a 4, and then we'll be looking for this fifth wave. We don't want to see it come down below 12,101, and that's including the extreme. So this is on the candlestick basis. 12,100, we start to believe that that could have completed the whole thing. Okay? So right now we got that, and then we're going to run back up. What did I say? 12,385. So we again, to do the others, we open it up a little bit. And we're putting in a C wave, and I'm going to put up and go over to extensions. There, to there, to there. Now we're looking for the C wave. And we have a lot of stuff in there. And I'm going to take out this guy. And now we're looking back to upside. So it comes back to 12,100. Excuse me, 12,200. And then begins to rally. We're going to find that resistance again at 12,255, 12,283.85. Wow. Through it, because we need to get above 12,327. And now we're looking at 64 to complete the whole move. So we're looking at that. That's potential. And again, 12,200 has to hold. We don't want to see it break below 12,100 because then that puts that top in place. And what we would be looking for, if the top is in place, I'm looking for that sell side to kick in. Right now, they're all just sitting around waiting for the next group to come in and see what they need to do, any news, et cetera, et cetera. So we're just holding stable. Direction has not been determined. Those are the plays. We come down, get about 12,200, then we rally back up, and then we have much higher numbers, 12,385, 12,400 for that matter, because we know that the Nasdaq loves to overshoot. If it is done with the C wave and the minor wave 2, then we just start dropping very quickly, getting below the 20, the 200s, the 50. This is the hourly chart, the 50 on down. Yes, breaking below 11,800 would definitely be in the picture. That would be the true level would be 11,921 because that's the bottom of wave 1. So below that level for sure, below this level for sure. As we then move down. And I can put those on once we're certain that that's what's in play. All right, that's going to be it for right now. And the next update will be on Monday, March the 6th.